3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Welcome back to TTMTrades. Today we're going to be doing a very in-depth analysis on ticker XOP and its inverse ETF DRIP, DRIP. But before we hop right into it, 2,600 followers. I appreciate every single one of you. Shout out to all my new followers who just recently hit that follow button. Hopefully I'm adding value to each and every last one of your trades. So let's just jump right into it. First, we're going to talk about XOP. And as you can see here, XOP is pretty much the S&P oil and gas exploration and production ETF on the New York Stock Exchange. So a lot of lines, and we're going to break all of these down. So just looking at the overall price action, something I want you all to pay attention to is, as you can see, XOP has pushed up into this known area of resistance and is sitting in this channel currently where you see, here we'll make this line green, currently where you see these two green lines. So this is a known channel and area of resistance. As you can see, it pushed back up into this area early January 2018 from this range of about 38.5 to give or take $39-40, where it gets into this channel and then a lot of resistance, and then it failed. And then again here, as you can see now, this month in May, we've pushed up into this same channel, and again we're trying to break out and create a higher high, and there's a lot of resistance in this area with the potential for this to break down. It fell again. One thing to pay attention to is on this high, it created a high of $40.12, and then on this push back up into this area, the high it only created was $39.90, which isn't very convincing. It didn't make a higher high to show that the bulls had control, pushing back up into this area of resistance. Now, there's still some time to go, and there's, there can still be attempts to break out of this channel, but as of right now, there's a lot of signs that are pointing that this is going to reverse here pretty soon. Now, one thing to pay attention to is this yellow line. As you can see, XOP was on a strong uptrend. As you can see, running from $28 up to about $40.12, where it currently peaked out at, where it had these highs, creating higher highs and higher lows, higher highs, higher lows, and then it made a higher high, and then instead of pulling back to make a higher low in this area where the old resistance was at, the trend failed altogether, falling below this trend line. So as you can see now, had this period of consolidation, and then it broke back out, and now this trend line has become a resistance. So XOP was unable to pretty much rebuild that momentum and break back above this trend line to signal that one, the bulls were back in control, and two, it can maintain that momentum of the trend line that it had originally established. Now this trend line has become resistance, and it is unable to push back through it to maintain that momentum that it had initially. So number one, that is a bearish flag. And then number two, what you have here, if you pay attention, as you get into this area of resistance, instead of seeing the volume pick up to show that the bulls are potentially trying to break through, the volume is beginning to descend. So with the volume decreasing, it shows that it's not a lot of buying interest in this area. And once the bears see that there's not a lot of buying interest in this area, the sellers will overpower the bulls, and then of course there will be more supply of shares than there is demand for shares at this price, which will cause another downtrend. So, and that's another bearish flag, along with a couple other things, just from besides looking at the price action. Your price momentum oscillator, your PMO, it ranges. It has extreme ranges, and as far as oversold, overbought, okay? But there aren't any particular lines. Every ETF, stock, bond, or whatever you're trading, they all have their own particular extreme ranges, okay, that signal a potential overbought, oversold, or area where it normally reverses. So if you look at the PMO, every time it pushes up into this low 3 to 3.5 area, then it reverses every single time. Now, as you can see here, pushing up into that area, you get that reverse here, again pushing up into this area of extremity. As you can see where the red line I'm showing as resistance, you get the reverse here, and then again pushing up into this area, again you get that reversal, and then again, as you can see, we're pushing back up into this area again, which also coincides with that last area of resistance, and we're having trouble breaking through, and your PMO line is beginning to converge on top of one another, showing that the weakness, the momentum in that general area is beginning to fade away. So that's another bearish flag, you know. So a lot of different signs pointing to XOP possibly reversing here sometime soon. Now, if it does reverse, you have these areas of support that you want to watch for to potentially try to make an entry, right, on your own accord. These are just old resistance levels and support levels that you could potentially try to enter on the pullback, but you do that based on your own strategy. Okay, so as you can see here, you had this little channel here from give or take $34 up to $36, $37 with the price action as it was making higher highs and higher lows on this trend line. You had this area of consolidation, this nice little channel here, and then it finally broke out, and now as it pulled back, it worked its way back into this channel, kind of on a upward wedge on the uptrend, and then you finally had to break out. So definitely one area I would pay attention to as this begins to break down. Old resistance possibly could become new support, and possibly an entry around at $36.5 to $37. And then if that breaks down, then that puts you back into this channel here of that $34 to $36, $37 range, and which in turn you'll have to work your way back into this channel. Okay, but one thing to pay attention to in this general area, this window of space, there isn't a lot of support. So if XOP does break down through this line of support right here, there's not a lot of room for support. So if it does break down, it'll probably break down fast from that 39 all the way down to this $36 channel, because there isn't a lot of past price action in this general channel or area to catch it. So it'll probably drop, and it probably will drop fast all the way down to that 36.5. Again, if for any reason this channel fails, as if it breaks below that $34 range, which was this old area's line of resistance, has now become this, it should become this line of support as it did here. If it breaks below that $34 range, then that will put you back down here in this channel, where you can see the price action, old resistance, and then became a new support right here and new support right here. And hopefully, if that $34 doesn't hold, hopefully it'll become new support down here in that $32 range. So just something to pay attention to. So if you're on the sideline as far as looking at ticker XOP, I would probably wait for a breakout to the upside on strong volume. If you don't get that, then it could potentially be a false breakout as far as a bull trap, and then for the overall trend to just fell altogether. But a lot of flags pointing to this one pulling back. Now, moving on to ticker DRIP, DRIP. DRIP is the inverse of XOP. So if XOP is going up, DRIP is going down. As you can see on the chart we was looking at, XOP was hitting a major area of resistance, pushing up, and then you can see DRIP is the inverse, and it pushes down. It does the exact opposite. So one thing to look at on this one for DRIP, which could make this a potential play, is, you know, you had the strong line of resistance creating lower highs and lower lows. Again, you had this high, a low, lower high getting rejected, a lower low, find a support in this channel, a lower high, rejected, a lower low, then it finally broke through, showing strength, and then as it pulled back, guess where it's finding support at and consolidating right on top of that trend line, which was this old line of resistance, and now it's becoming this line of support now. So potential play here for drip to possibly reverse back into these price channels right here. So one thing to pay attention with drip is as you moved into that general area, you can see the volume here was pretty low. I'm not gonna say low, but it was pretty at a steady pace. Now as it entered into this price range down here of that $8 to $9 window, you see the volumes begin to spike pretty. Oh man, if I can click this, you can see the volume is spiking now pretty high, and this is showing a lot of buying interest in that general area down there. So that's one sign of a potential reversal. As you can see, the volume has begun to pick up, which shows buying interest down in that $8 to $9 range. Now, another thing to pay attention to, just like we talked about with our PMO, reaching levels of extremity, it's the same thing on the opposite end as far as the inverse for drip. So as you can see, as the PMO begin to converge on its line, then it signals a potential buy signal, right? And you get this nice little run up from $16 to $20. Again, as it begins to converge here, you get another nice little buy signal in this channel, and then again you get another convergence as it reaches this line of extremity, the green line. Each and every time as it pushes into that green line, you get another buy signal, and you get this run from $9 to $19, and then again we're pushing back into that green line, this line of extremity, and you can see the PMO. You can see it on it's pointing directly down, showing the strength of the bears pushing it down, and now it's beginning to converge and turn sideways, showing that the bulls are coming into play, which is a potential buy signal. You still need this. You still need time for this area to kind of develop, but just looking in an early, looking for early signals. We're on that line of extremity again. Your PMO is beginning to converge, and there's a lot of buying volume in that general area from $8 to $9, and you could possibly get a potential breakout here from these lows to begin heading back up into these highs. Now again, like I said, this is the inverse of XOP, so this is going to react based off XOP failing at that level of resistance it was at on the last chart. Now if and when this does push up, you have this level of support right here, which is in that $9 range, which is now acting as resistance. So you want to get this breakthrough through that $9 to $9.50 range. Now again, pay attention to this channel. There isn't a lot of resistance in this area, so if you break through that $9.50 range, there's a clear run up to $11, because there isn't a lot of price action in this general area that will cause an oversupply of shares to be dumped on you once you push into this channel for a possible pullback. So there's a clear run up to $11 potentially before you hit your next before you hit your next line of resistance right here, which was the resistance in this channel. And then again, if you can break through that $11 range, remember we're looking long term now. Okay, there will be some up downs as far as the uptrend developing. We're not saying this is going to run straight up non-stop, but it will be a bumpy ride moving into these areas of resistance. Once you break through that $11 range, then that puts you back into this channel right here where you can see $12. There's heavy support in this area. So excuse me, $13. So as you can see here, it was a strong area of support, and then as you can see here, strong area of support before it broke down and then got rejected and failed. So the $13 would definitely be a heavy area of support to break through. But if this is a reversal signal with the PMO and everything converging, and our RSI beginning to trend back up, and your on balance volume flatlining and kind of trending sideways, showing the bears and the bulls going back and forth as far as volume, if you can get in from that low 8s to low $9 range, then I mean you are looking at a spread of $5 moving back up into that $13 range to $4. So potential play here. So we'll definitely keep an eye on the both of them. One thing to note is this trend line, which was holding the overall price action down. You finally got that breakthrough to show strength, and then as it began to pull back, now it's consolidating on top of that trend line and support. So these are all very bullish signals, along with the spikes in volume showing that there's a lot of buying interest in this general area from $8 to $9. So I would definitely pay attention, and I would start watching XOP for a possible breakdown to begin making an entry on ticker DRP for a potential run back up into these areas of 11, 13, and then $16 is a stretch more long term down the line, but definitely want to work our way in this channel of $8 to $9 and try to get that breakout above $9. And that's it. TTMTrades, man. Hopefully you learned something. Hopefully this helped a lot of people out who are watching ticker XOP and Drip. And until next time, man, hit that subscribe button. Follow me on StockTwits. Stay alert on all my call outs. And then we have a private chat room down in the bottom. The link is down on the bottom in the comments. Click that and join that private chat room. And let's continue making money together.
Houston, Tranquility Base here. The Eagle has landed.